Guys, chapter 9, management of working capital. So here what they have given that on 1st January the managing director of Naurion Limited wishes to know the amount of working capital that will be required during the year. So what does he wants to know? Working capital required during the year. This is what he wants to know, right? From the following information, prepare working capital requirement forecast. So what is the working capital required for this year? This is what we want to find out, right? So then they have given that production during the previous year was 60,000 units. For previous year it was 60,000 units, and it is planned that this level of activity would be maintained during the present year as well, right? Sorry, yeah, it is planned that the same level is planned for even the present year, that is 60,000 units will be even produced during this year. Next, what they have given, the expected ratio of cost to selling prices or raw material 60%, direct wages 10%, and overhead 20%. What does it means? It means assume right now if the selling price is 100, they have given that what cost to selling price or raw material or 60%. In the sense, see, cost of raw materials to selling price is 60%, which means if the selling price is 100, then cost of raw material is 60% of selling price, which is 60 rupees, or the cost of raw material. This is what they have given, okay? And then they have given that raw materials are expected to remain in store for an average 2 months, okay? What? Raw material for 2 months before issue to production, and each unit is expected to be in process for 1 month, and the raw material being fed into pipeline immediately, and the labor and overhead costs accruing evenly during the month, okay? In the sense, labor and overhead is going to be equal amount. So here what, each unit, okay, for 1 month. And next, finished goods will stay in the warehouse awaiting to dispatch to customer for approximately 3 months. So finished goods will be in the warehouse for 3 months, okay? Then credit allowed by creditors is 2 months from the date of delivery of raw material, and credit allowed to debtors from us to them is for 3 months from the date of dispatch, and selling price is rupees 5 per unit. There is a regular production and sales cycle. Wages and overheads are paid on the first of each month for the previous month. So previous year's wages and overheads we will be paying in the next month, that is first of the next month, okay? The company normally keeps cash in hand to the extent of 20,000. Always there going to be cash in hand to the extent of 20,000. So now from this data we need to find out what working capital requirement for the present year. So guys, now what we have to prepare? We have to prepare working capital requirement forecast, right? So working capital in the sense current assets, current liabilities, and in current assets it includes what? Raw material. So where is the raw material? I'm sorry, yeah, here. So what they have given? They have given that raw material is 60% of selling price. The cost of raw material is 60% of selling price. So what is selling price right now? So let's calculate, okay? Selling price in the question they have given that 5 rupees per unit. And how much is the production this year? They have given same as the previous year. So 60,000 into, okay, now just calculate what is the raw material. Okay, sorry. This is the selling price, right? Into how much they have given? 60%. 60% of selling price. So this comes out to be 60k into how much? Sorry, 5 into 0.6. So 1,80,000. So the required amount of raw material for the whole year, okay, for the whole year for 12 months is 1,80,000, and still they have given that what? Direct wages 10%, overhead 20%. Direct wages and overhead. So again 5 rupees per unit selling price into 60,000 units into 10%, and 5 rupees into 60,000 into overheads is 20%. So this comes out to be how much? 30,000, 60,000. So direct wages is 30,000 and overheads is 60,000. Fine with this. Okay, next what they have given, raw materials, sorry, one second, yeah, raw material are expected to remain in store for an average 2 months before issue to production. So in the store it will be remaining for 2 months, for 2 months period, okay, before it is issued to the production, says before it is issued to factory for further process. It will be staying in the store for 2 months. So what is the cost for us for that 2 months period? So let's find out that. So raw material 1,80,000 upon, this is for whole year, so 12 months into, it gonna stay in our store just for 2 months. So this comes out to be how much? 30k. Fine. And next what does the question says? Each unit is expected to be in process. In process in the sense work in progress, okay, for 1 month. All the unit is expected to be in process for 1 month, okay. The raw material being fed into pipeline immediately. Raw material immediately, it is fed. And then next, labor and overhead cost accruing evenly during the month. In essence, labor and overhead is work in progress. This is accruing evenly. In essence, if this is 50%, then that is also 50%, like that. Means this both gonna be equal, in equal quantity, something like that. But raw material, you cannot say like we're gonna give off percent now and off percent 50% right now and 50% later. Like for this, let's take an example. See, if there is a factory which manufactures a shirt, okay. So now for shirt you can't say like for shirt what is the raw material required. For shirt the raw material required is cloths, right? So cloth, in the sense it should be in a ready format. You can't say like I gonna give a thread, right? If you say like see, for making a shirt, cloth is the important thing which is very much required. But rather than saying you're gonna provide them cloth as a raw material, if you say listen brother, we haven't yet converted thread into cloth, so can I provide you a 50% work in progress, that is thread? What will they say? No, we're gonna contract with someone else and we're gonna take the cloth only directly, we can't take this thread, right? So you can't give raw material 50%, 74% or 80% like that. If you can give raw material for production, it should be 100% ready to use, not like 50% right now and 50% later on. So for shirt manufacturing company, what is the raw material? It is cloth. And cloth, in the sense whatever be the raw material, it should be ready to use and it should be 100% complete, okay, not 50% or something like that. So this is done. Now work in progress, in that raw material they have told in work in progress is for 1 month, right? So 1,80,000 upon 12 months into 1 month, how much it comes out to be? 15k, right? I hope you understand. But why does the product becomes work in progress? If it is completely done, then it will be considered as finished goods, but it is work in progress because laborers, in the sense employees, are still working on that process. So if on the financial date, for example, assume on 31st 3 20 x1 or something, if you ask whether the product is done, they are say like the employees might say like the collar is done, the pocket is done, something like over your hand something is done, that is your yet not done, like that. So here whatever the percent according to the in question they have given, we need to follow that, right? So here they have given that evenly both labor and overhead costs are accruing evenly, in a sense like overheads, in the sense electricity. So if not the product is completely prepared, do you think the overheads like electricity, the rent and other expenses are also incurred completely? No, right? Because laborers are yet working on it, and also overheads are still incurring every single day until the product is complete. So here both are 50%, which labor and overhead. They both are evenly incurred but not yet completed, so they are work in progress. So what is, sorry, so here direct wages, right? So direct wages and overhead, they have given how much direct wages, 30,000 upon 12 months into 1 month, but only work in progress they have given labor and overhead. So 0.5, that is 1 by 2 you can do, or even you can do like 1 by 2 is also same and 0.5 is also same. See, so next overhead is 60,000 upon 12 months into 1 month into 0.5 of the work is done. But raw material you can't take it in a thread form. If you're a shirt manufacturing company, you need a cloth itself. So the cloth, in the sense 100% readily usable material, raw material, it can't be 50% done and 50% not yet, right? So 30,000 divided by 12 into 1 into 0.5, 1250, and overheads 60,000 divided by 12 into 1 into 0.5 comes out to be 2,500. So what is the total work in progress? How much? 1250 already come 2,500 plus 15,000 comes out to be 18,750. And what's next? So now this part done, this part done, this part done, and now next what they have given, that finished goods will stay in the warehouse awaiting dispatch to customer for approximately 3 months. Okay, so now let's work on finished goods part. So finished goods, in this is, in finished goods, what and all is included. Cost of production, in this is direct material cost, wages cost, overhead cost, all together forms the cost of finished good, right? So now next, what is the direct wages, sorry, direct raw material cost? We have already found how much, 1,80,000. Sorry, raw material, direct material, same, 1,80,000 upon 12 into 3. How much it comes out to be? 45,000. Then next, wages, direct wages, how much? 30,000. 30,000 upon 12 into 3 months, 7,500. Next, overheads, how much? 60,000. So 60,000 upon 12 into 3 months, कितना? उतना, 15,000, right? So now calculate all together. How much? 15,000 plus 7,500 plus 55,000. How much it came to be? 67,500. So 67,500 done. What is next part? Credit allowed by creditors 2 months and credit allowed to debtors is 3 months. So credit for what they have allowed for raw materials, right? So what is the cost of raw material? We have already calculated, that is 1,80,000. So the creditors is how much? 1,80,000 upon what is the time allowed by them to us? It is 2 months upon 12 months comes out to be 30,000. And next, debtors. So debtors time period is for 3 months. So how will you calculate debtors? Debtors, in the sense total sales upon whatever the time period they have told no for us. From that we're going to calculate debtors. So For debtors, what and all the amount included in the debtors in the sense, so for first total cost of sales, in the sense whatever the cost we have incurred until now to make the product as a finished good, right? So here what and all the cost we have incurred for total cost of sales. Until now we have incurred direct material cost, direct wages plus overhead. Only these things we have incurred. And for this total cost we're going to add some profit, and that is going to be the sales, right? But here they haven't discussed anything about profit, so just leave it. So what and all the cost we have incurred in until now in the sense raw material, wages, overhead. How much it is? It is 1,80,000, 30,000, 60,000. So it comes out to be 1,80,000, 30, 60, 2,70,000, right? So 2,70,000. So in this so they have made this sales. So in this 2,70,000 upon 12 month into the time they have given for us in the question is 3 months. So this comes out to be 67,500. I hope you are clear with this. See, sales, how we gonna incur the cost of sales? Sales amount is what? The amount we have incurred until making raw material to finished good, right? So for making the raw material into finished good, what and all the cost we gonna incur? Direct material cost, direct wages cost, overheads, and also other cost. But the question has given only about this cost is necessary or required in the question to make the goods, to make the raw material as a finished good. So these are the cost incurred until now. So these are the cost incurred. So this is the total cost of sales, and this total cost of sales is for 12 months, but here debtor period is only for 3 months. So total cost of sales upon whole year 12 months into what is the debtors period, that is just for 3 months. So 67,500. I hope you are clear with that. And creditors we have already found 30,000, and the next what they have given, selling price, we know that there's a regular production and sales cycle. Then they have given wages and overheads are paid on the first of each month for the previous month. In the sense, for example, if I worked in the month of January, then I'm gonna get the salary on 1st February, right? So like that. So previous year's month is paid on the next month. Previous year's salary is paid in the next first of each month. The company normally keeps cash in hand to the extent of 20,000. Always, like cash will be there in your working capital, that is 20,000. So now this lag, that is wages and overhead. So what is that? Wages payable of previous month. Okay, how much wages? 30,000, overhead 60,000. So 30,000 upon 12 months. We are just paying it lately by 1 month. Means previous years this month on the 1st. So this comes out to be 2,500, and overheads 1 month 5,000. This is payable because we are paying the previous years in the current month on the 1st date, right? So now prepare a beautiful working capital statement by whatever we have solved until now, right? Yeah. So working capital statement, I'm just doing it roughly. I hope you people do it so nicely. Particulars amount, current assets, raw material. It is kept in store for just 2 months. So that amounts to 30,000. This one done. Next, Next is work in progress. That is after this one done. And then what is next? That is this one, finished goods. Total cost we have incurred this. $67,500 done. And one next what? Next is creditors and debtors. So debtors $67,500 again. Done. And in the question they have given that what they have given, the company normally keeps cash in hand to the extent of 20,000. So cash is also a current assets, right? So cash, how much? 20,000. So done. And what's next? Just total it. And next, current liabilities. What are the current liabilities? We have calculated creditors. Done. How much creditors? 30K. And what are the one more thing we have calculated, that is wages. Previous year, sorry, not previous year, previous month payable in the present month, that is payable. These two wages overage. So wages payable 2,500 and overhead payable how much? 5,000. Done. So is there anything more? Nothing. So now just calculate it. 35,000 plus 2,500. 37,500. Oh, yes, correct. And then next 30,000, 18750 plus 67,500 plus 67,500 plus 20,000, which comes out to be 203,750. So the working capital required, current assets minus current liabilities, which comes out to be 37,500. 166,250. That's what given in the study material, right? See, done, right? I hope you have understood. If you have any doubt, do let me know in the comment section. Thank you.